Good morning, Namaskar. This is the bi-monthly monetary policy statement for August. The Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is MSF rate, and the bank rate stand at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. The cumulative rate hike of 250 basis points undertaken by the MPC so far is working its way into the economy. Real GDP growth for 2023-24, that is for the current year, is projected at 6.5%, with Q1 at 8%, Q2 at 6.5%, Q3 at 6%, and Q4 at 5.7%. Real GDP growth for Q1 of next financial year, that is 24-25, is projected at 6.6%. The risks are evenly balanced. Let me now turn to inflation. The moderation in headline inflation to 4.6% in Q1 of 23-24 was in line with the projections set out in the June MPC meeting. There was pickup in headline inflation to 4.8% in June due to an upturn in food inflation. On the positive side, inflation excluding food and fuel, that is core inflation, has softened by more than 100 basis points from its recent peak in January 2023. CPI inflation projections for 2023-24, that is for the current year, assuming a normal monsoon, as I have said, is revised to 5.4%, with Q2 at 6.2%, Q3 at 5.7%, and Q4 at 5.2%. Further, CPI inflation for first quarter of the next financial year, that is 2024-25, is projected at 5.2%. It has been decided that with effect from 12th of August, scheduled banks shall maintain an incremental CRR, that is ICRR, of 10% on increase in their NDTL between May 19th and July 28th. And what I am now going to say is equally important. This measure is intended to absorb the surplus liquidity generated by various factors referred to earlier, including the return of rupees 2000 notes to the banking system. This is purely a temporary measure for managing the liquidity overhang. The incremental CRR will be reviewed on 8th September or earlier, with a view to returning the impounded funds to the banking system ahead of the festival season. India's current account deficit was contained at 2% of GDP in 2022-23 as compared with 1.2% in 2021-22. Let me end by recalling the prophetic words of Mahatma Gandhi, and it is as follows: I have no doubt that our country would rise to the greatest height among the nations of the world. Thank you. Namaskar.